What's happening right now with the US housing market? Let's talk about that because here is a new report from the National Association of Realtors just posted a few days ago. We're going to talk about home prices, home sales, housing inventory, and much, much more in today's video. So let's go and dive right in. I don't want to waste your time. This was posted on January 24th, which was on Friday. It says existing home sales climbed in December according to NAR. Sales advanced or increased in 3 of the 4 major regions. However, on a year-over-year basis, sales increased in all 4 of them. So here's a table looking at the seasonally adjusted annualized rate of home sales. For December, that increased to 4.24 million existing home sales. That's an increase of 2.2% compared to November, and also a big increase up by 9.3% year over year. Something I noticed as well is that the sales pace for December was actually higher than the street's forecast because the street was forecasting for just under 4.2 million transactions. Now, every housing market's different, right? So looking at the 4 major regions, the Northeast, the Midwest, the South, and the West, we saw a giant increase in the West up by 12.9% year over year. After that was followed by the Northeast up by 10.4%. The only region that posted a decrease either month to month or year over year was actually in the Midwest, where sales decreased by 1% compared to November. In contrast, the biggest increase on a month to month basis was, of course, the Northeast up by 3.9%. Now, here's something that's pretty crazy as well. I've been talking about this for months now, right? Because I was saying that we're going to get around 4 to about 4.1 million transactions in 2024. And if that were to occur, we'd basically be at a 29-year low in home sales. So we actually ended the year at 4,060,000. That is actually the fewest number since, again, 1995. So in other words, existing home sales decreased to a 29-year low. That was after 2023. We had 4.09 million. At that time, that was the lowest sales since 1995 as well. It basically a 28-year low. What's wild about this is that even though we had a 29-year low in transactions, home prices overall for the calendar compared to previous calendar years increased to a new all-time record high. We'll talk about that here in a little bit. All right, before that, let's talk about my own analysis of their data here. Again, these 2 columns I pulled from NAR's website because I am a member of the National Association of Realtors, including California and of course the Sacramento Association of Realtors. So I just want to break this down very, very quickly. I'm going to kind of share a high-level overview regarding what's happening regarding sales, prices, inventory. I tend to take a deep dive, but I don't want to kind of bombard you with data and numbers. So I'm going to do my best to kind of share at a high-level overview what's happening and also my biggest takeaway regarding the data. So anyways, for December, the pace, again, annualized and seasonally adjusted, was at 4.24 million. That, in fact, was the strongest sales pace since February of 2024. Again, what really caught my attention is that sales in December were higher than October and November. And of course, back then in December, or I should say in September and October, we reached really low rates. I think rates decreased to about a 2-year low in late September or mid-September. So it's pretty crazy that we have more home sales in December despite elevated home prices and, of course, elevated rates. Therefore, on a national level, the housing market in the United States, of course, is very resilient despite all these challenges that home buyers are facing right now. And the number one, like I mentioned right there, housing affordability continues to be a huge problem. It has been a huge problem for about 2 years now. Let's have a look at the changes compared to November and also compared to December of 2023. So compared to last month, sales rose by 2.2%. It is unusual to see an increase this time of year. Obviously, the housing market tends to slow down quite a bit in December, of course, in January as well. In fact, this increase of 2.2% is actually the biggest increase from November to December since December of 2019. For comparison's sake, look at last year this time. Sales decreased by 0.8% compared to December of 2023. And let's look at December of 2022. Right there, it decreased by 2.2%. So this gain of 2.2% is quite a bit higher compared to the past several years. Now looking at the year-over-year change, this is actually a little bit bigger here because the increase is a gain of a whopping 9.3% compared to December of 2023. By my nerdy analysis here, because I'm, of course, a housing market nerd, that's the biggest year-over-year gain since June of 2021. Having said that, back in June of 21, that was really impacted by COVID lockdowns that occurred really in the spring home buying season of 2020. And because of that, the year-over-year gain in June of 2021 was very high due to the low levels in the previous year. On top of that, around June of 2021 was very close to all-time record lows. I was going to say highs, lows in mortgage rates. In August of 21, the average mortgage rate or 30-year fix decreased to about 2.8%. So it makes sense to me that this is not a big surprise that we have the biggest increase since June of 21. And let me just look at that real quick. Back in June of 21, look at that. Sales rose by 23.3% year over year, because back in June of 2020, sales tanked down by 10%. So because we're comparing this to a very low level in home sales at that time, and on top of that, mortgage rates decreasing quite a bit compared to the previous year, of course, it makes sense that we saw this giant increase back in June of 2021. So my personal opinion, it's actually better to look at pre-COVID levels. So this gain of 9.3% that we saw this December is actually the biggest annual gain since November of 2016. This, by the way, marks only the third time since June of 2021 in which sales increased compared to the previous year. We saw decreases on a year-over-year basis for about 3 years. And this is only the third time that we have a positive gain. And in fact, we had a positive gain for the past 3 months in a row now. So here's my biggest takeaway regarding these figures. At 4.24 million, even though that's the strongest sales pace since February last year, it's still at relatively low levels. It's more normal to have around 5 million sales each year. That's the average number going back to 1989. And here we are at 4.24 million. On top of that, we're well below pre-COVID levels. Back in December of 2019, compared to this last December, we're down by 22%. Looking forward over the next couple of months, I also imagine we're going to see this relatively low level in home sales and potentially throughout the whole year unless mortgage rates decrease quite a bit. Here we are in the end of January, and the average 30-year fixed rate, according to the Mortgage News Daily, is around 7%. This is going to keep home buyers on the sidelines, but also home sellers as well, because we still have this lock-in effect in which people are not really willing to give up their 3% rate and buy a new house and take on a 7% rate. This will cause inventory levels to rise this year. I expect we're going to see sometime this year in which on a national level, we could see more inventory compared to 2019. However, I do not expect to see inventory skyrocketing this year because of this lock-in effect we're seeing right now. In any case, I think it's an important segue here to talk about inventory levels. Let's talk about that. So in December, there was 1,150,000 existing houses for sale. This is higher compared to 1 year ago. 1 year ago, we had 990,000 houses for sale. But at 1.15 million, though, we're still lagging behind pre-COVID levels. Back in December of 2019, we had just under 1.4 million. What we're definitely not seeing right now is inventory absolutely skyrocketing, because the levels for December are actually the fewest amount of inventory since March of 2024. In fact, this marks the second consecutive month in which inventory has actually decreased. Now let's talk about the month supply, because the month supply in December was at 3.3 months. That's the lowest reading since March last year. Back then it was at 3.2 months. This is slightly higher compared to pre-pandemic levels because back then the month supply was at 3.1 months. But I just add this, I normally have not really shared this in previous videos. I looked at this data, which by the way, this goes all the way back until, when was it? 1999, January of 1999. So looking at the all-time record high of inventory levels, that was at around 4 million houses for sale. That was back in July of 2007. This would mean that inventory would have to nearly quadruple right now to get to 2007's levels. The biggest takeaway regarding this figure right here is that inventory would basically have to nearly quadruple in order to get to 2007's levels. In contrast, the all-time record low was set back in January of 2022 when we only had 850,000 houses for sale. So I would love to hear from you guys regarding this, but here's my biggest takeaway regarding these figures. Right now, we're actually much closer to the all-time record lows than we are to the all-time record highs. Again, inventory would have to nearly quadruple in order to get to 2007 levels, but inventory is not too much higher than the all-time record lows set back in January of 2022. In order to see prices fall greatly on a national level, housing inventory would have to explode. But where would this massive supply or massive increase in supply come from? Like I talk about, we have this lock-in effect in which people are not willing to trade in their 3% rate and buy a new house at the 7% rate. That's causing sales to remain at relatively low levels, but also it's causing new listings also to be at low levels as well. All right, getting back to NAR's press release, let's talk about home prices. It says the US median existing home sold price for all housing types in December was at $404,400, which by the way is exactly the same price compared to 1 month ago, but it is up by 6% year over year. On top of that, all 4 US regions posted an increase year over year. According to Lawrence Leung, who's NAR's chief economist, he said the following: the median home price was elevated partly due to the upper end of the market's relative better performance. I'll talk about that here in a little bit. Sales rose by 35% from a year ago for homes priced over, or for houses that actually sold over $1 million, while sales fell for home prices under $250,000. So before I share my own analysis of their data regarding home prices, let's talk about his quote regarding we're seeing more sales at the upper range of the market. So for sales in December, let me get my highlighter here, over $1 million, that increased by 34.9% compared to 12 months ago. Sales in the range of $750,000 to $1 million increased by 32.8%. In contrast, we saw decreases for homes that sold for less than $250,000. So clearly we're seeing a big increase in sales for much higher compared to the national average, especially houses for over $1 million. Now, something to keep in mind though, this does not mean we're seeing a huge amount of sales over $1 million, because looking at the sales distribution, only 7.5% of all home sales this December were for over $1 million, and in the range of $750,000 to $1 million, that was only at 7.2%. So the vast majority of home sales in the United States are in the range of $250,000 to $500,000. That was at 45% of all home sales this December. Okay, let's look at historical trends looking at home prices, because again, we're at $404,400. That's flat compared to December and basically flat compared to the past several months, which by the way is normal. These figures are not seasonally adjusted, and home prices kind of go like this, where they peak in the spring and early summer months, then they decrease in the winter months. So it's normal to see this kind of flatness in home sold prices over the past couple of months. Now looking at the year-over-year change and month to month, again, we're flat compared to last month, but a big increase up by 6% year over year. This, by the way, is the biggest year-over-year increase since October of 2022. So for comparison's sake, last year this time, or I should say, 2023, we saw an increase only up by 4.1%. This year, we're up by 6%. Right in line with a long-term average, because based on my nerdy Excel formula, the average change year over year in December each year, going back to 2010, is an increase of 6%, right in line with what we saw in December. Also, the historical average from November to December each year since 2010 is a decrease down by 0.2%, more or less in line with what we saw last month. Also, for comparison's sake, here's the changes in home prices. I mean, this is absolutely wild, right? A giant increase up by 47% over the past 5 years. It's just absolutely insane. Also, just kind of another comparison, looking at this change up by 6%. The biggest decrease we've seen in recent time was back in December 07 through December of 2008. Back then, the US median sold price decreased down by 15%. And this all makes sense, right? The balance between supply and demand, because back in, again, July 07, we had around 4 million houses for sale. Let's look at 07 really quickly here. July 07, look at that. Yeah, we had around 4 million houses for sale. And on top of that, the month supply was at 9.6 months, which again makes sense that home prices absolutely tanked 1 year later, down by 15%. Let's also take a look at how each of these 4 major regions fared, because of course, real estate's local, right? Looking at home price changes in Texas, Florida, it's going to look a lot different compared to the Northeast, for example, where they have a lack of houses for sale. So in any case, looking at prices, that rose the most in the Northeast, up by a whopping 11.8%. The Midwest up by 9%. The South barely squeaked out a gain, I should say. Basically half the gains we're seeing in the US, a gain of 3.4%. The West right in line with the national average, up by 6%. We also ended the year last year where the median sold price was at $407,500. This is the calendar year home sold price. Comparing that to previous calendar years, that's a new all-time record high, quite a bit higher compared to what happened in 2023. Back then, we're at $389,000. All right, going back to NAR's article, let's talk about days in the market and also the share of cash buyers as well. So looking at this, based on their survey, by the way, properties remained on the market for 35 days in December. That's an increase from the 32 days we saw in November and the 29 days we saw 12 months ago. So houses on average were selling about 6 days longer compared to 1 year earlier. Now, first-time home buyers were responsible for 31% of all home sales in December. That's up from the 30% we saw in November and the 29% we saw in December of 2023. When looking at cash sales, that was at 28% of all transactions. So around 1/3 of all transactions this December came from a cash buyer. In other words, they did not use a loan to buy a house. That was at 28%, a little bit lower compared to 12 months ago when we're at 29%. Meanwhile, distressed home sales, which are defined by foreclosures and short sales, is virtually non-existent at 2% of all transactions. That has been in the range of 1 to about 2% for several years now. With that said, if you guys got any value out of today's video, then please hit the like button. I greatly appreciate that. Also, if you guys want a real estate agent referral, or you want to buy a house in Sacramento or the San Francisco Bay Area, then please email me at jason@meetjasonwalter.com or check out my website, which is realestateteamfinder.com. With that said, I appreciate you guys so much. Have an amazing day, and we'll see you next video.